How does a man commit tax fraud for years and not get caught? It's called the power and secrecy of U.S. companies and banks, because the last place you'd expect to hide your wealth in the highly surveilled and militarized United States may just be the best place to do it. Welcome to episode 6 of the Poor Man's Pablo Escobar, where we dive into the underworld of finances through offshore corp talk posts and real cases and break down what it means for you. In today's case, we have an Italian entrepreneur who has unknowingly committed a crime for years by operating a 6-figure U.S. business without reporting anything back home. Yet despite breaking the law, he's managed to stay off the radar, all thanks to a loophole only the United States offers. So how did he pull this off? What can we learn from his situation? And most importantly, when does a U.S. company actually make sense for both privacy and taxes? Well, let's dive in. Now, we always get heat for saying that the United States is one of the best offshore jurisdictions, but I'll say it again. If you're not a U.S. citizen, then the U.S. offers some of the best financial privacy in the entire world. If you are an American, then of course, forget about it. The IRS is going to automatically get all of your banking data. If you stop filing taxes, red flags will go up. But for foreigners, it's a completely different story. Our Italian friend is not writing this forum post from prison because while the US does force other countries to automatically report Americans through something called FATCA, it doesn't hold itself up to the same standards. It does have information sharing treaties with many countries, including Italy, but in practice, banks don't automatically report their foreign clients unless the numbers are super high or it's something outright shady. Those treaties usually require a formal request from that country. And that's the difference. When you're the financial powerhouse of the world, you get to decide how seriously you're going to enforce those rules on yourself. And right now, if you're not committing an outright crime against the United States, most American institutions won't bother with you. Your home country, that's of course a completely different topic. Even with the new Corporate Transparency Act and the beneficial ownership reporting, only FinCEN and the IRS have access to that data. And the US isn't in the habit of handing that information over to other countries. And that's how our Italian guy was under the radar for years. Let me be very clear. What he did was outright illegal. We're not here trying to justify it. But this case does prove an extremely important point, that what's written in the law and how it actually plays out are two completely separate things. All right, coming back to our story. After having pulled off a multi-year tax fraud, our Italian dude now wants to bring everything back home. That would be a very dumb move. Why? Because staying hidden with money that's not cashed out is easy until you start spending it. And while US privacy loopholes allowed him to stay hidden for all these years, the moment he starts buying anything in Italy, whether it be a car, real estate, or even just depositing large amounts into an Italian bank, guess what's the first question on everybody's mind? Where did you get the money from? And by then, the game is over. The Italian tax authorities don't need a US bank snitching on him. His own spending habits are going to do the job for them. So what are his options? Well, option number 1 is to just come clean, pay all the taxes and fines in Italy. Don't really know what's going to come out of it. Not exactly appealing. Option number 2 is to buy all of his real estate and assets in the name of relatives, own nothing in his own name, and avoid all local bank accounts at all costs. Kind of difficult to implement. Option number 3 is to completely cut all ties with Italy and basically go somewhere else, remove your residency from over there. Again, we don't advocate for these brazen and short-sighted strategies where essentially you're telling each country that you're paying taxes somewhere else, but you don't pay anything. That's a plan for people on their deathbeds who don't mind spending time in jail. For a long-term, legally compliant strategy, setting up a US structure can be a powerful long-term solution if done right. Here's a potential outline. Step number 1, you want to set up a US LLC in Nevada or Wyoming. They're known for their privacy protections, but more importantly, their affordability and access to solid banks. Yes, Some US banks and many EMIs will still accept foreigners for accounts, even remotely. Step number 2, decide who's going to own the LLC. If you hold it personally, that's simpler and cheaper. Or do you add in an extra layer, such as a Hong Kong company or an offshore, to add additional privacy and also give you tax strategies that are more creative? You also get more reputable banking access for larger amounts. Step number 3, move your tax residency. Yes, there are intricate company setups where you can avoid paying almost all tax by not distributing profits or dividends, such as with Estonia, but that's a lot of expensive accounting, and all those business expenses will have to be related to the company. It's far easier to spend your money if you just move your tax residency, cut ties with that high tax country, and move somewhere else. Now, if you are going to go down the path of owning the LLC through an offshore, I already mentioned a good option. It's Hong Kong, because you're basically getting very reputable access to banking. It is a bit pricier though. You're basically paying for that banking access. If banking is not a concern for you, by all means, go with a cheap offshore such as BVI or a Panamanian company. So, why are all these YouTubers and so-called offshore experts shouting, "Get out of the US now! Avoid it at all costs"? Well, the irony is that even they quietly own US companies and subsidiaries. Why? Because if your entire business depends on selling the dream of offshore, US LLCs are just too cheap, too easy, and efficient to bill at a premium. No complex accounting, minimal compliance costs, and access to reputable banks. And if your business is promoting these exotic jurisdictions, are you really going to hype something that is technically onshore? Now, let me repeat. The US's geopolitical power allows for people to get away with stuff like our Italian friend did. But to rely on that type of luck, that's not a strategy. That's a gamble. And now he's paying far more trying to find out ways to cash out without getting caught. And why would you go through all of this and live in constant fear when you can use all of these US structures legally and long-term and avoid all of the fallout? And the point of this video is, to quote Machiavelli from The Prince, the friendship of the powerful is not to be disdained. Not because power is benevolent, but because when you build beside it, no one questions your foundation. You don't have to marry the United States. Take the privacy, take the access to banking, use it as a tool. That's it for today's presentation, guys. As always, if you enjoy this type of content, you can comment down below, share it with a friend. It will help with the YouTube algorithm. I made a previous video on how creative accounting and invoicing works for the rich to reduce their taxes. It's very interesting for anybody who owns or runs a business or who wants to cash out their cryptos. I'll be seeing you though in the next video, and until then, bye-bye.